For more on the impact this could have on retail, let's bring in Telsey Advisory Group CEO Dana Telsey, who's here on set at the NASDAQ markets. Dana, welcome. It's great to see you in person.
Thank you. Great to see you guys in person, too.
Should we be worried at all that Christmas will be ruined for the retailers? How much stuff is already here?
You have a bunch of stuff here already. A lot of things got brought in July and August. But to your point earlier, look at Best Buy, Christmas in September. Look next week, Amazon, Target, Walmart. Look at even Bloomingdale's, Friends and Family, 19th through the 30th of September. So it is a concern because anything that's going to make prices move up or delay Christmas, when already you're having a consumer who's so bogged down with other things, geopolitical or elections, it's a headwind for the retailers and a headwind for the consumer.
Dana, you're in the Hall of Fame in the space.
Thank you.
It's the first time. Is it a first time in almost
maybe
18?
in person.
I like the in-person thing.
Yes, it's good.
It's amazing. So let me ask you this. We're trying to figure this out. The dollar stores have been disastrous now for a while. Is that more tell on them, or is it sort of a tell on the lower-end consumer and the economy by definition?
It's a tell on the lower-end consumer and the economy. Take a look at the strength that Walmart and Target have had. Take a look at the off-pricers. The dollar stores are losing share to these other players. And Dollar General is going to get hurt from this port strike also if they didn't bring in goods early enough.
Who doesn't bring in goods early? I mean, I would think that the bigger ones, they've learned their lesson from the pandemic. They do it proactively. But who's sort of more of a just-in-time retailer, if that even exists anymore?
Apparel. I mean, you have a lot of apparel companies that are just-in-time. The Abercrombie & Fitch is doing just-in-time. You have a lot of, whether it's the others, the Gaps are doing just-in-time. The ability to chase with agility is one of the things that after you had the headwinds of supply chain from 2 years ago, they've all become better at having inventory that meets what the customer wants. Let's see holiday 2024.
So let me ask you about high end.
Yep.
So we saw a big rebound just on the China news and sort of okay, maybe they'll save the day. But what do you think of, it's been a very difficult year for high end. What do you think of that market right now?
I'm concerned about the high end. I think when all the European luxury goods report their sales middle to end of October, I think China's sales are going to be down 30% plus. It's a headwind. When Tiffany is closing or reducing the square footage of their Shanghai flagship by 50%, what does that say? And it's not like you're getting the pickup from Europe or from North America. So it's a sluggish time in high end.
Some from Japan.
Yes, some because the Chinese are going to Japan. That's a benefit. When I always think about high end, who's going to benefit over time? You want to be with LVMH. They are the bellwether because of the different category extensions and the strength of their brands that they have.
Dana, you just mentioned that obviously holiday season is kind of coming earlier. We've seen that for years now. What are you expecting as far as discounting? Because that seems to be a trend that we see. The earlier that the holiday season starts, especially online, it seems like once the discounting starts, it really never ends. And it actually goes through early into January.
Exactly. When you think about what holiday is, that month of January is key because don't forget, it's the redemption of gift cards, too. I think we're going to have a more promotional holiday season in 24 than 23. It's starting already because also getting this consumer to unpack their wallet. Look at the savings rate that we've had, where savings rate has come down, too. And that aspirational consumer of the middle income level, they're going to watch those prices. So I think it will be more promotional. And there's the haves and the have-nots. You look at the haves, Birkenstock, Deckers, Abercrombie & Fitch, and the off-pricers and the discounters. That is where the action's at.
Is there any concern about the notion of restocking and if they have to get more goods, they cannot because of the port strike?
Some of them, but most of them have already brought in enough goods.
Right.
And you know who the benefit of this is at the end of the day? As goods come in, because we've all heard the statistics, every day it could be another week to 10 days or even up to 6 months until you get the flow correct. Hello, off-pricers. TJX, Ross, and Burlington, they're going to be the beneficiary of goods that won't come in on time.
I know where to shop now.
How do you see? So my understanding is Walmart is actually the most exposed to the port shutdown, but on the same end, like they're probably better capitalized than a lot of the other retailers. Like, how do you see them faring or like more exposed to the strike?
Well, let's not forget also what is Walmart's biggest percentage of sales coming from? Food and grocery. So yes, it's discretionary too, but food and grocery is going to bring people in there on a regular basis, and the trade down or the go-to Walmart from the dollar stores will only help them this holiday season.